Good evening. This is Adrienne Morgan with Fairway Independent Mortgage. And today I want to discuss government loans. Government loans are USDA, FHA, and VA. The difference between the three programs are with USDA, they're for people who have low to moderate income. It can be 100% financing. However, that does not include your closing costs or prepays. A lot of people think once they hear 100%, that automatically takes care of everything. It does not. So if your home is worth, the house you're going to buy is worth $100,000, they will give you $100,000, or whichever the appraised value or contract value is, whichever one is lower. However, they do not pay closing costs, which include prepaids and attorney's fees, the lender's fees, several fees to go into that to add up to a closing cost. All right. You can get in those loans with a lower score is 580 with some companies. Some companies will actually tell you that you don't have to have a minimum credit scores. Other companies will say minimum credit score is 620. With Fairway Independent, we like the 620. We know the lower the credit score, the higher the risk. That means the more likely it is that a person will default on a loan. So part of the job of a loan officer is actually making sure that a person has the ability to pay and the willingness to pay. The lower your credit scores are, it usually tells us that even if you're making a lot of money, you're not willing to pay. Okay, so that's part of our job, making sure you meet those two criteria. With FHA loans, they can go down as low as 500. Usually if you get a 500 credit score, you need at least 10% to go into the deal, and you also need to get an approved eligible. That just means when you run through a system, and everybody goes through the system will say, yes, we like them, approved eligible, approved refer, meaning saying, we need to have somebody look at this file just to make sure it meets the criteria, or it decline. Okay, they go down as low as 500. Again, you're going to need at least a minimum of 10% to put down. We will go down to 580. Remember, the lower your credit scores, the higher risk it is. Again, our job is to make sure you're able to get in the home, you're going to stay in the home. Okay, you can put down as minimal amount as 3.5% with a 580. If you get an approved eligible, sometimes you have to put down a little bit more. It's a great program. They normally have great interest rates, a little bit better than conventional. A lot of people don't know that. It's usually, I only do fixed rates. I don't ever do ARMs because most people don't understand what an ARM is even when you explain it to them. So I don't do that to protect the client. It does have upfront mortgage insurance. You hear a lot of people complain about that. However, that is financed in the loan. That's an option. You can finance that in the loan. And it has mortgage insurance that you're going to pay throughout the life of the loan, but usually people refinance after they've been in a home for a certain amount of time. They either try to do a cash out refi, or they do just a rate and term, or they sell the home. And then there's VA loans. VA loans are for people who serve the United States military or are serving. Sometimes they include spouses of people who served in the United States military. If they've been married for a significant amount of time and they lose their spouse for some odd reason, they could possibly qualify for a VA loan. They are also 100%. The benefit with these loans is they don't have any mortgage insurance. They do have what they call a funding fee that's up front, but you can be exempt from that depending on if you meet certain criteria. These are my favorite loans. The reason why is because they will allow you to go a higher debt to income than most other programs, and they have a whole lot more flexibility than most programs. They really go to bat for people who've been in the military, right? And just think about it. There's less than 1% of the people in the United States that actually go in the military. That means people who are saying, I'm willing to risk my life so other people can share the freedoms, right? So they actually go above and beyond. There is actually no minimum credit score requirement, but again, the lower the credit score, the higher the risk. Our minimum credit score requirement is 580, right? And that's fair considering what happens, most people when they're 580 or below, they do come with a lot of hiccups. I like to call them hiccups here and there. They're harder. The lower the credit score, the more difficult it is to get into a home, right? Because again, we got to make sure that when you get into this home, you're able to stay into this home. A lot of those people don't have their documents together. They're kind of fussy when you say, well, I need this, I need that. Here's what they don't understand. It does not matter what your credit score is. If the underwriter sees something that they need more information about, they get to ask you that question because they are taking the risk. The underwriters, every loan that they do, even if we get an approved eligible, that's running it through the system. If you default on that loan within the first 2 years, that falls back on the underwriter and actually the loan officer, right? So if we get enough defaults, that's going to get us in trouble. We can lose our license. The underwriter can lose their license. That is their livelihood. So imagine doing a loan where you got a lot of questions. You want to get these questions answered and people are fussing with you. They get a little aggravated. Well, it's not because they don't want to give you a loan. It's just because they just want to make sure things are where they need to be. Right? We have to make sure that you can stay in this loan. So this industry is not about just putting a person into a home so you can make money. Right? It's about putting a person in the home because you feel like they deserve it. They need a second chance. Government loans allow people who don't have great credit, who have had hiccups, and I love to say, bad things happen to good people all the time, right? Things that's out of their control, right? But you don't have to live knowing that something bad happened and that's not going to be held against you. That's what the government was nice enough to do for you. If you have any questions in regards to these loans, please give me a call. I will be more than happy to help you. Great loan officers, they always look for the best program to put their clients in. So you never have to say, hey, I'm a first-time home buyer, I want down payment assistance. If they take the complete application and they see you don't have a lot of money, that's the first thing they start thinking about. Let me see if I can get this person some down payment assistance to help them get in a home. Now, with down payment assistance comes different sets of rules, right? I've seen VA do as high as a 65% debt to income on a client, which was shocking to me. I've heard underwriters say they've seen them go all the way up to 70%, right? Not with down payment assistance. If you get down payment assistance, you're not going that high because these people are giving you money, and like loan officers, we're trying to make sure you stay in the home. So their rules are a whole lot more stringent than other rules.